For a look at the trading on today's markets, I spoke to David Halliday from Macquarie Private Wealth. David Halliday, thanks for joining us this evening.
No problem.
It was a broad-based rally today. What were the main drivers?
Well, it's really interesting, actually. It looked like the market was a bit fatigued yesterday. It looked like it had run out of puff, but the buyers re-emerged today. We hit a 4-month high. We've had 5 straight up days, and it did again look like it was new money coming into the market. It wasn't just money switching from one sector to another. So, look, I think it's just this positive economic situation. It doesn't look like the US is going to have a double dip. The Asian economic data coming out is pretty strong. The Australian data has been very strong, except for today we had a bit of a hiccup. But overall, it does appear that people are very much over the fact that we're going to have a double-dip recession, and on that basis equities look quite good. Interesting too today was the turnover, some $6 billion changing hands. That's up around the sort of levels you'd expect to see when the market is firing. So some pretty encouraging signs all around.
Now, we reported last night that NAB has terminated its bid for AXA Asia Pacific, and of course that happened after the market closed. Has there been any reaction today on the stock market?
Well, there certainly has. What you reported is the reason why the shares reacted today, and they were up around 72 cents or 3% at 25.94. Really, I think it's just the market's relief, if you like, that there's no longer a $13 billion takeover hanging over the company. There's the acquisition risk and all those things that the market would have been factoring into the share price prior to this, and also the fact that maybe the company might have had to go out and raise some more money. That's NAB. So, all those things are now relieved. The bid's been dropped officially, and clearly the market responded positively. Interestingly enough, though, AXA held up pretty well too. Some rumours circulating now that AMP might in fact come back and have another look at AXA. It has once before. Maybe they'll have another look at it again now.
And Origin Energy has announced plans for a joint venture hydroelectricity plant in Papua New Guinea. Has that sparked interest at all today?
No, quite the opposite. Spark selling. The shares were down 17 cents or 1%. And I think the best word to use is probably fanciful. There's a lot of big terms used in the announcement, multi-billion-dollar investment, Papua New Guinea, undersea cable, supplying electricity to Australia. I think the market said, look, at the moment that's just a little bit too far-fetched, and there's a few things in there that make us a bit nervous. And, any one of multi-billion-dollar investment, PNG or undersea cable is enough to unsettle people, and that's certainly what happened today, and that's why the share price fell.
There's been a record gold price in US dollars, of course. What sort of reaction has there been with gold stocks here in Australia?
Well, as you'd expect, the reaction's been nothing but positive. The biggest company in the market here, Newcrest, had a 50-cent gain today to $39.50 in round figures. Its all-time record high previously was $40, so it's knocking right on the door of a record high. If it wasn't for the fact the Australian dollar had been so strong and touched a 2-year high overnight, it probably would have broken through to a record high in Australian dollar terms. But look, it's quite interesting. Normally gold's in favour when the equity market's a bit shaky, when inflation's a problem and people have other concerns about the economy, and none of those appear apparent. We're getting the equity market going up, we're getting positive economic data, and globally there doesn't seem to be huge signs of inflation. So it's interesting to watch the gold price go up. It does appear at the moment it's a bit of a momentum trade, it's a juggernaut, and people just want to be part of it. But really too, the action hasn't just been at the big end. The mid-cap and small-cap sector has had a real boom. It's been almost a frenzy in that space as explorers produce good results, but more importantly, consolidation is a theme for those mid and juniors, so it's really been a pretty exciting sector over the past month or two and looks set to continue for a little while yet.
David Halliday, thanks for talking to us tonight.
No problem.